Yeah, I think the broad overview on 2025 is that debt again increased dramatically. So leverage is higher than ever before on any metric you look at. And at the same time, you've got, for instance, Bank of Japan. They're raising interest rates. They're blowing up the carry trade. The carry trade is what allowed liquidity to support asset prices, and that is unwinding. And I think that's going to come to fruition in 2026. And I believe that that's what the metals, what the commodities are looking at. That's why you're seeing commodities run and the metals have been just on fire. The two best performers for 2025, I believe, were gold, silver, and of course the miners. And I think they're sniffing that out. They're sniffing out the fact that they're going to have to print to oblivion in order to service the debt. The debt game is over. The reset, we're probably, I'm guessing maybe the fourth inning, fifth inning of a baseball game into the reset. But the last innings are going to be the wild innings.
What about the change in behavior of the major exchanges, the spot price and on the COMEX and LBMA? Any revelations that happened this year? Any major changes in behavior, what you're watching there?
Yeah, the biggest change in behavior is that we're basically in backwardation worldwide. And what that means is people want their metal. They want it in hand. They want it and they want it now. They're not willing to wait 30 days, 60 days, 90 days. And that's why you're seeing markets that are paper markets are trading below markets that are physical markets, price-wise.
And do you believe that switch in emphasis from paper markets to physical markets is what you've been talking about for a long time? Is this one of the steps that you've been telling people to watch for? And what do you think how will that affect the price action of gold and silver because of that change?
Well, understand that the price action for 30 plus years has been managed, if you will, with paper contracts, with leveraged paper unbacked contracts. And that is ending. So from a price standpoint, I think you're going to see both gold, silver, and other commodities liberated and trade as they would in cash markets, where there's no interference by futures, options, etc., trying to in the metals market, trying to suppress. And then it goes the other way around. In the paper markets, when I say paper, I'm talking about stocks, bonds, things like that. Those same derivatives have been used to hold the markets up. And I think that the paper influence is waning at this point. The point in time where it's done, that's where you'll see markets crash and gold and silver basically become unobtainable.
It's been forecasted by others that we have on our channel who watch for momentum structural analysis from Michael Oliver and others, that we should be shifting into a new price regime because of this transition that you talk about. For those who are waiting around for the good old days of low prices to come back before they load up and that sort of thing on physical metals, are you thinking that it's unlikely that we'll see a major opportunity like that? Even if there is a rapid price correction, will there likely be availability of physical at those lower prices for a sustained enough period of time for people to get orders in and all that? Or do you think that all of us need to just get our heads around the fact that we're transitioning into a new price range and we're not likely to see the opportunities that we've had in the past return anytime soon?
Yeah, even if markets crashed, and in the past when markets crash, you see both gold and silver drop in price. Even if markets crashed, I don't think you'll see silver ever under $50 again. I don't think you'll ever see gold under maybe $3,700, $3,800 again. But the risk of waiting, hoping, and hope, by the way, is for dopes. When you're talking about finances, you don't hope, you look at things mathematically. Hoping to get lower prices is a fool's game. I mean, you're going to count your wealth in ounces, not dollars. And to wait, hoping that prices go lower. And if you're wrong and prices go higher and something happens to the supply chain and you're unable to buy it, you're locked out. Once this happens, you're never going to be able to alter your position. You're either in or you're out.
In the past, you have a history of a former career as a Wall Street branch manager and are extremely aware of the way that markets trade, the way that the financial bets that are made there, how they're funded with cash or with margin and so on. What's your view of the transition, the changing of the guard, perhaps you'd call it, at the metals, in the metals and commodities markets regarding, you mentioned this transition from paper markets into physically dominated markets. How does that change the behavior of the action that you're seeing on the exchanges?
Well, like I said, the action on the exchanges are changing because it's moving. They're all moving more toward delivery. They're all moving more toward a cash and carry market. Now, COMEX was not designed as a cash and carry market, and you can see the inventories have declined, especially in silver. You can see that with LBMA. You could see that with Shanghai, even though Shanghai is basically a cash market. But I've been adamant all along is that the end game, gold and silver would end up being cash markets, cash and carry, and the futures would be irrelevant. I mean, it's very possible to see gold at $50,000 or $100,000 bid and nobody willing to sell. Yet COMEX has got gold contracts offered at $10 an ounce, but nobody's willing to buy them because there's no gold behind them. So I mean, that's where we're headed, and that it all ends in what I've talked about for so long: a failure to deliver. Somebody stands for their metal, and that metal doesn't exist. They can't get the metal. And then it's completely game over because confidence will be 100% broken.
It's interesting because John Rubino, whom we often have on our channel, just wrote an article today about the shrinking trust horizon. He's talked about that term for some time. And what you just talked about is loss of confidence. Alistair McLeod has talked about loss of confidence in the U.S. dollar, the U.S. Treasury bond. John Rubino has talked about loss of confidence in information that people are getting from the internet when we have these AI spoofed. Well, it looks like it's Warren Buffett giving an announcement, but it's not really him. It's just an AI deep fake. Or we've had recently someone talking about action on people, their silver being at risk, get out of silver quick and get into gold because gold's not listed on the critical materials list and therefore you'll be safe and the government won't try to come and confiscate it. What's your view of this idea of loss of confidence, not only in the markets, but in the information that we're getting about the markets?
Well, understand the dollar itself, the euro, the yen, the pound, they're all fiat currencies and they all are valued because of confidence. Confidence goes another step further. The reason, and going back to the reason governments don't want gold and silver to go higher is because that shows a lack of confidence in their currencies and it makes it more difficult for them to borrow. The suppression scheme on gold and silver really started in 1996 with Robert Rubin, with what he called the strong dollar policy. And the strong dollar policy basically was dollar good, gold bad. And, they were able to, for years and years, they were able to put a collar on gold and silver. That collar is breaking, and as that breaks, so does trust. And you're right, there's so much, it's hard to tell what's real and what's not real. I posted the young Korean guy on my website and got about 5 or 6 emails immediately back saying this is AI. And I said, yeah, I know it's AI, but his logic is sound. Now, the only thing I've heard him or it or whatever say that was speculative and it looks like was not true was the CFTC meeting at 9 o'clock this morning telling people that you can't buy, like the Hunt brothers back in 1980. But his logic on that was, in my opinion, was 100% correct. If the COMEX comes out and tries to pull the same bullshit they did with the Hunt brothers, where you cannot buy, you can only sell, that will be the end of the COMEX contracts, because that will immediately, people will immediately buy every physical ounce of silver, every physical ounce of gold that they can find. You'll see that bifurcation between paper and gold come to 100% fruition, and silver.
We may have seen the foothills of that mountain already when there were arbitrage opportunities that opened up with the Shanghai and other physical markets, leading by several dollars above this, forsaging this launch in silver prices this year. Any comments from you on the fact that it seems like these Asian or across the seas physical markets have been leading the way and basically showing that lie to be what it is, the paper price in the West?
Yeah, and it shows that the U.S. is no longer the centric, most important market in the world, if you will. Gold and silver have been bought, and the deficits, the supply deficits, have been exposed, not because of Americans. I mean, as a broker this year, we took more sell orders from clients than we had combined in all the years of our careers, or at least I did. I mean, I took tons and tons of sell orders this year. So North America was a seller, yet the price of gold and silver exploded higher. And the reason being, you had central banks from all over the world buying. You've got India importing massive amounts of silver. China's a huge buyer. Russia's a buyer. And mentioning Russia, this whole thing got kicked off when Biden tried to weaponize the dollar, the SWIFT clearing system, and confiscate the 300 plus billion that Russia had in reserves. And those are still confiscated. And the world looked at that and said, hey, wait a minute. If they can do that to Russia, they can do that to anybody, including me. And that's why you've seen sales of treasuries and purchases of physical metal delivered out to these entities.
Wanted to get your input on, as Mr. Gold, on the extraordinary low premiums that we saw emerge this year on pre-33 semi-numismatic American gold coins, Liberties and St. Gaudens. Generally, over time, the premiums on any product will go in and out like the tide and rise and flux relative to spot price. But this was an astonishing dip in the premiums on pre-33 gold relative to modern bullion. At some times, you could actually get the old gold cheaper per ounce than you could new gold. If you could weigh in on that first, and then we're going to hit you up on the same question about 90% silver low price. So first, if you could talk about the pre-33 gold.
I was going to go to silver after that. Yeah.
Go ahead. Go right ahead.
You did have some very large estates liquidate this year, but you also had people just trying to live. I need to sell 5 coins or 10 coins or 1,000 ounces of silver or whatever. You've had North Americans are feeling the pinch between the cost of living going up and the incomes, the wages aren't keeping up with it, and that's come to a head. So you had a lot of selling. And same thing with silver. The only way to buy silver back in the 70s and early 80s was via junk silver. I mean, there were other ways, but primarily that's what North Americans bought, was pre-1965 dimes, quarters, half dollars. And a lot of those bought in the $30, $40, $50 range. And for 20, 30, 40 years, people were thinking, if silver ever gets back to $50, I'm going to get my money back out of it. And that's what you've seen a lot of sellers of junk silver, and the dealers got overwhelmed, and their response was to lower their bids. And whenever anybody sold to them, they sent that junk off to refiners to melt it down. So if they're taking a 6% or 8% or 10% discount bid to customers, they're picking that up when they get it refined. Now, right now, yes, that's uncomfortable because you're looking at the bid now, what, $5, $6 under spot for junk. So that's not comfortable if you own junk silver. But I think if you wait 3 months, 6 months, a year, this glut of sales from the 1970s and 80s, once that funnels its way through the snake, guess what? There's way less junk silver available or in existence than there was before this. And you can put this down. You know, I'm sure people come back to me if it doesn't happen. But in my opinion, when all is said and done, junk is going to be the highest priced silver in North America. It will eclipse eagles at some point because they make eagles every year, and this year they've destroyed the supply of junk silver outstanding.
The other thing that we heard was that burgeoning industrial demand for 1,000-ounce silver bars at the industrial level and taking from the exchanges by large industrial demand has caused a huge demand spike on those refiners, and that they simply, in order to keep up with production rates, had to turn